So let me give you guys an example of an easily distracted person. Me, a full grown adult in my big age. I started off doing my taxes. I got home and I said, get these taxes done. I actually went to my dad's house, picked up my tax forms, and then brought them home. By the way, there's more daylight much later now. Anyway, so we're on our way out of winter. For all those who get really affected seasonally by like lack of daylight and like, you know, weather and everything. So I'm hoping that your moods are improving. Back to the point. Again, distractions. Basically, this year I've worked 3 jobs in total. Two of them I worked at the same time. One I had quit and then got the other 2. The point is, right, I did all of that and still made so little money. More money than I've ever made before. But it is still not that much money. I think it's a decent amount of money for the year. It's been able to afford me an apartment. But that's about it. It's actually just affording my life right now. And that is fine because I would rather it be that than be where I was before, making literally half that amount. So my total this year was $48,000. That is all 3 jobs combined, like all the money I made this in 2023. I shouldn't say this year because it's 2024. 2023. Like my front door is like here, and you can just hear everything when you're in the hallway. For the whole year, so all 3 jobs for 2023 all amounted my income, gross income, taxable income, and that is the most money that I have ever made in my entire life. At 36 years old, that's the most money I've made in a calendar year. So personally, I feel like I am doing really well. I'm doing really well, realistically, in my opinion, and I want to continue to grow from here. I don't want to backslide in like financially where I have to feel like I'm starting over. Now, I've been able to actually like start working on my credit and all those things simply because I've made more money now than ever. Just in 2022, I made actually half of that. My total, I think it was either 22,000 or 25,000. I can't remember, but that I also had 2 jobs then. Again, not at the same time. I stopped one when I got this other one that was too full-time demanding, and I couldn't keep up with the second job. They wanted me there 6 days a week because it was short-staffed. That's retail. Even though it was banking, it's still retail. I brought all that up to say, as I'm doing my taxes, and I open my I'm doing my taxes, and then I open a tab to Google something about Roth IRAs. I went to go Google like the credit situation where you get tax credits for it. I did not qualify. I think I've mentioned in a video before I do 4% total. So it was 2 and 2 and then 4, and then the company I was with, which I'm no longer with, but I was with them, they match you at 4%. So they match me. So for a total of 8%, technically of my check goes to that Roth IRA. And I recommend that you roll over your IRA, especially if you already have another job lined up and you have exactly, a place where you want to go and it's full-time with benefits. Roll it over, or you can roll it over even when you're in the interim, because you can independently have a Roth IRA account that's not through your job. Most jobs it comes like automatic with your benefits. So I will double check and put here how a Roth IRA will work out if you are gonna have more than one. Like if you can have more than one, which I believe you can because it's just another retirement account. So I believe you can have more than one. I'm just trying to figure out if there's any discrepancies per state. So like if state things would be different, you know what I mean? Like again, this is the USA. When I'm going into basically a job search, I decided this time I would cash it out. I rolled it over before, but I didn't do that this time. This time I cashed it out. That does come with penalties. One of them got penalized more than the other. But I was able to, I think I mentioned this as well. I was able to save $1,900. My cash out was actually 12. Hold on. It was 1,400 because the other, it came in two payments because there's two different types. One's the Roth IRA and the other one's just like a 401k. And I think $1,400 is a nice little nest egg if you don't want to keep it in the Roth IRA because you're like, I want to give it to, I want to attach it to my company. Or maybe you can just use that to start. It does get taxed, is what I'm saying. Not, yeah. And then you get a form in the mail, a 1099-R. So keep looking out for that because you need to use that to talk about you have to add that to your income when you're doing your taxes. So you got a little financial story time.